silver bullion to $50 per ounce and when to sell your gold and silver. Hi, my name is Marco Byrne, the Research Director of GoldCore.com, your gold and silver storage specialist. And today we're going to look at the very positive outlook for silver. In previous videos, we've looked at the very strong fundamentals of silver in terms of supply and demand. And we're going to briefly look at that as well, because that obviously underpins why we believe silver prices are going to go much higher and going to target the record highs that were seen in 1980 and again in 2012. So we're strongly of the view that silver is going to outperform gold, given the gold-silver ratio, and that it is likely to outperform risk assets, financial assets of stocks and bonds in the coming years. So I'm going to dive straight into it, and I'm going to show you the silver chart, which is very interesting indeed. And this is the price of silver in dollar terms going back 10 years from our website, and you can see it was actually up over $49 per ounce. I think this is obviously a monthly close at $47.91 in it's April 1st, 2011. So sorry, it wasn't 2012, it was actually 2011. Gold price record highs were in 2012. So silver actually peaked earlier, April the 1st, 2011 monthly close, and since then we're in a quite significant bear market. It's important to remember silver had actually risen from below $5 per ounce in 2000 and 2001 and went up 10 times up to nearly the $50 level, which is the same level that it was at in 1980. So since then, obviously, there was a massive bear market, and it looks like it bottomed in 2015 below $14 per ounce. Since then, we've been sort of we've tested those bottoms again. As recently as June 1st, we were as low as you know, mid $14 per ounce, and now we are around the $18 per ounce. So I think a lot of technical analysts, when they look at it, they believe once we get through the $20 and we have a higher monthly close above the $20.32, the $21 per ounce, then we are going to go much higher, and we could quickly test much higher levels at $30, $35 per ounce. So silver today, it's about 65% below the record high that it was in 2011, and 65% below the record high that was in January 1980. So it's important to consider that context, because there's very few assets in the world today that are 65% below the price they were in 1980. Most assets since 1980 are up 10 times, 100 times, 1,000 times. There's been massive inflation, particularly in assets in recent years. The Dow Jones, it was at 1,000 in 1980, and today it's at 30,000. So the Dow Jones itself is up 30 times, and silver is 60 to 70%, roughly 65% below the record high in 1980. So it looks fundamentally undervalued. And when you compare silver, obviously versus gold, which we're going to look at now, but we compare silver to all other commodities, all other financial assets, stocks and bonds, S&P 500, Dow Jones, silver is fundamentally undervalued, and that's why we believe silver is likely to outperform both gold and other assets, and that's why people should have an allocation to silver in the portfolio. So the fundamentals, we'll touch on the all-important fundamentals, because that's what ultimately will drive the prices to all-time record highs. The World Silver Survey from 2019. So our friends in the Silver Institute, Michael Di Rienzo and his colleagues, do this wonderful annual report. Unfortunately, this one is a little bit dated at this stage because it comes out April every year. So we wait with bated breath the new one, which is coming in out in 2 months. But last year's report showed clearly and suggested strongly as well in terms of outlook, and that's what we see in the numbers in terms of particularly the silver ETS. But it showed clearly that the global supply of silver from the mining industry has actually fallen in recent years, and it fell again in 2018. And given the price performance of silver in 2019, silver was up roughly 15.5% in 2019. So given that performance, the supply of silver may have increased somewhat in 2019, but there's no one expecting a massive increase in supply because silver is a byproduct of base metals, the likes of zinc and nickel and these other base metals, and there has been a huge increase in the production of base metals. So the supply on the supply side, it's anemic at best, and meanwhile on the demand side, it's very strong indeed on the industrial side, and we believe more importantly on the investment side in terms of coin and bar demand and what we do in terms of your silver legal tender bullion coins and your large silver bars, your 1,000-ounce bars in vaults in Zurich, in Singapore, and in various storage locations around the world. So that demand is very strong, and that's why there is actually a deficit in the silver market and has been in recent years. So the World Silver Survey it's always well worth a read, and yeah, all the statistics are there, and it shows it quite clearly. And what's interesting as well is also the tech demand, particularly from the solar side of things, and that's meant to be very significant indeed. So photovoltaic, your solar panels has gone from nearly zero, obviously in the early 2000s. I think the figures here were 2009, 2010 they were built into the other industrial this section here. But now photovoltaic it's up at 80.5 million ounces, and that's demand for silver from that sector alone is very sustainable. It may actually increase quite a bit, you know. So there is a deficit there, as we can see in 2018, and I think that most likely will have continued in 2019 and now into 2020. So our friends in Gold Charter, us, Nick Laird does some amazing charts indeed, and he's well worth subscribing to, is Nick. And his charts here, this one is global silver production from 1835 through to 2018, and you can see in recent years it's actually production has fallen, and the question is that a long-term structural thing or is it a short-term thing? And again, the fact that if you get a massive financial crisis, there will be less demand for base metals, and therefore there'll be less silver produced because it is a byproduct, as I said, of these base metal mining. So that's what makes silver very interesting. It's supply demand. It's inelastic, unlike most things in the world. And just because the price goes up doesn't necessarily mean that the supply increases. So that's on the supply side, and then on the demand side, demand has been very strong and robust on the industrial side, on the tech side with the photovoltaic, and particularly very strong in terms of silver coin and bar demand and silver in ETFs and indeed as investment silver in various vaults, repositories, mutual funds around the world. And you can see it's very interesting. Gold has hit all-time record highs. Gold in ETFs, so total gold holdings in global gold ETFs, has reached all-time record highs as we reported last week in our market update. And now we're now back at the level that was seen in 2011 for the gold ETF holdings. But meanwhile, the silver ETF holdings, they've been consistently rising in recent years, you know, and have seen consistent gains, as you can see in this chart here. So the smart money has been allocating to silver and has been quietly accumulating silver at these very low levels, as they did from 2000 to 2006, 2007. It's interesting. I just did an interview with IG Markets, and you know, the question was, well, if the fundamentals are so sound, why hasn't the price gone up? And the same thing happened from 2000 to 2006, 2007. The prices went in effect sideways, slightly higher, but not as much as people thought. And then you saw massive outperforms of silver subsequently. So that's the transparent silver holdings from Nick Laird. This is the monthly transparent silver holdings. You can see just strong trend there. People are, big money internationally is gradually accumulating silver at these low prices below $20 per ounce. And you can see this, so that's blue is the transparent silver holdings, and gray is the silver price. And you can see here we have a massive base in silver between the $14.50 to $20 per ounce level, and it is very, very bullish indeed. So yeah, if you look at the gold-silver ratio over 100 years, we are up near the record highs. The all-time record high was around nearly 100 actually in 1991. Today I think it's around 88. So yeah, we're around, gold's at $1580 per ounce, and silver is near $18 per ounce. So it's very, very high. In the Earth's crust, geologically, there's 15 parts of silver to 1 part of gold, and that's why throughout history, various monetary regimes throughout history and central banks throughout history have pegged gold to silver around 15 to 1, 10 to 1, 15 to 1. And that's because of the actual, 15 to 1 is what's on the planet in terms of the supply and the above ground supply. And yet a huge amount of silver has actually been used up in industrial applications, in mirrors, in medicine, in technological gadgets and photography for the last 100, 150 years. So that it in itself suggests that the gold-silver ratio is going to come back down as it does, and we'll most likely revert to the mean. And you can see the mean is, back down at these levels, around the below 50, and even as late as when gold spiked to $50, we got down to 31.60, and I believe strongly we'll get back down to those levels and lower in the coming months and years. It's similar when you compare silver to financial assets. The Dow silver ratio, the S&P 500 silver ratio. S&P is a better way of looking at it, but in terms of the big round number of the Dow at 30,000, if you divide Dow 30,000 by silver at $18, you get roughly 1,600 is the ratio. So we're up at very high levels indeed, and I think we will revert back down to the mean, and that means that stocks are likely to either go sideways or lower. Sorry, it doesn't necessarily mean that stocks could go higher, but silver is most likely going to outperform stocks. So even if the Dow goes from 30,000 to 40,000, silver could go from $18 to $50 or $100. And this reversion to the mean will almost certainly be seen again in the coming months and years, given the very strong fundamental outlook for silver. And I would say the weak outlook for stocks, which are being driven increasingly by speculation, by stock buybacks, by cheap money, the Federal Reserve engaged in quantitative easing again, and it's a lot of it is speculation. It's, as you can see, it's very much the FANG stocks are driving the whole thing. So we've seen what's happened with the crazy stuff with Tesla in recent days, shooting to all-time record highs, and Netflix and Google and Apple. These tech stocks have been leading this rally, but the fundamentals of the industrial sector and the wider economy are actually deteriorating, and indeed so. And then you're beginning to see that in the profits as well, in terms of the reported earnings of the companies. So another reason why both gold and silver will outperform financial assets and risk assets in the coming months and years. And this is an interesting chart as well, very interesting indeed. So this is the silver chart. If you adjust for inflation going back 100 years, and you can see that silver is back at levels seen in the early 20th century, 1660, 1680, 1916, 1917, and these are the levels that we're at now, and there's little or no assets or commodities or property that are at the levels that we're seeing in the early 20th century, So there's a fundamental undervaluation there from a historical perspective with silver. And that doesn't necessarily mean just because of that historical undervaluation that the price will outperform, but given the fundamentals, it strongly suggests that it will, So this would make us quite bullish on silver, and that's why we believe that silver will reach the record nominal highs of $50 per ounce, and likely go much higher and surpass the inflation adjusted record highs, which is above $100 per ounce. And that's what tends to happen to most assets when they're in a bull market. They tend to surpass the previous inflation adjusted highs. So then the question becomes, what puts people off silver is its volatility. It is volatile. All publicly traded assets are volatile, but the volatility of silver can be greatly exaggerated. The volatility is akin to the FTSE 100, one of the leading stock market indices in the world, So it's volatile, but it's not hugely volatile compared to individual blue chip shares or Facebook or Apple or all the tech darlings that we see people day trading again today, you know, and no one ever talks about, you never see anyone putting a health warning on buying Apple shares or Facebook shares or any shares, individual shares, because of the volatility, even though they're hugely volatile. So silver in the grand scheme is actually not that volatile, but compared to gold, it is a little bit more volatile. So it's important to keep that in mind. At the same time, it is more volatile than gold, and we've seen that clearly in the last blow off top, and when silver moves, it really moves. And that's why you have to be mindful of the volatility, but don't allow it to discourage you from having that allocation to silver. And so that feeds into the question of how to accumulate silver. Like all assets, you should dollar cost average, euro cost average, pound cost average, gradually accumulate a position. Decide how much of your portfolio you want to put into silver. So if you're putting 10% into gold, potentially 15 or 20% into gold today, given the risks that are in the world that we cover in our videos and in our daily market update, you could easily put 5% or 10% into silver as an allocation portfolio. But you have to be mindful that it is more volatile than gold, and you also have to have an eye on the exit, as was seen during the last bull market in silver. So you dollar cost average into position, but you have to also consider the exit and when do you sell your gold and silver. And it's important that people actually consider when will they sell their silver. So it will be prudent to sell some of your holdings when silver outperforms gold and outperforms these other assets. You take profits, and people need to be ready to take profits at certain levels. So, you know, I think $50 is obviously a big technical level that a lot of people are going to be looking for, and who knows, it may get to 47 or 48, and then you see a sharp correction back down to 20 or 30, and then it goes off to $100 for an ounce. Nobody knows, but that's the reason why at certain stages, so say silver gets to $45 and you've seen massive gains, in the next 12 months, 18 months, silver gets to the say $45 level, then you should consider selling some of your allocation, particularly if you have quite a high allocation for silver at 5 or 10%. And similarly, if gold or silver gets to $90 per ounce, you might sell a little bit more, you know. And that's not to say we're saying that you should be trading in silver. It's just saying that we believe everybody should have a core physical position in silver. Take delivery of a small amount of silver if you feel comfortable and secure in your own home. And the majority position you should have in the safest vaults, in the safest jurisdictions in the world. And Zurich remains probably the safest jurisdiction from our perspective. And own it fully segregated, fully allocated in the safest vaults in the world. Maybe have some in country as well, given the Brexit and given the increasing systemic risk in the world and the possibility of capital controls and exchange controls. It actually makes sense to own some of your precious metals in country. So that means taking delivery of some and taking possession of some, but also having some in, you know, if you're resident in the UK, have some in the vaults in UK. If you're resident in Switzerland, have some in the vaults in Switzerland. If you're resident in Singapore or in Asia, have some in Singapore. But have some in country. So if you're a UK investor, you would have some in London, and you would have some in Zurich. And that way you're nicely diversified, you maintain liquidity, and you own the safe haven asset in a very safe way in two jurisdictions. And it creates that sort of important geographical diversification. So yeah, so I think the key thing is, as I said, consider selling silver when it gets to certain levels, but maintain that core position. So you decide, right, I always want to have 3% or 5% of my portfolio in physical silver, and that's for your worst case scenarios that you keep as this financial insurance in case the system shuts down, there's bank holidays, people can't access cash for a period of time, and you want that actual physical gold to be liquid and accessible, whereby you can actually raise cash for it very easily in order to basically for your day-to-day expenses and your day-to-day living and needs, you know. So so that's important to maintain that core position, but do consider taking profits if you have a slightly bigger allocation to silver because you believe it's going to outperform as we do. Consider taking profits at below sort of key technical levels like $50 or $100 per ounce. So that's it in a nutshell. It is very, very, I mean, the charts speak for themselves. Silver itself, it's actually outperformed stocks in the last 15 years, which is something you would rarely hear in the mainstream media. So, I mean, look at this. This is showing us how silver has returned 10.2% in dollar terms. And S&P, I think, is done 7%, maybe 8% max in dollar terms. But at the same time, you can see the volatility here to 2013, 2014, 2015. So this is the time when people should have been, after an 83% in 2010, that's the time to take profits if you're over allocated. If you have a minimal allocation to silver and you're just buying it purely as financial insurance, then you never sell it and you just hold it. But if you are slightly over allocating to silver, as some of our clients do, then you need to be conscious of potentially selling at certain levels. And we've come full circle back to our website, and this is silver in nominal terms. So yeah, hi ho silver. It is very, very positive indeed, and yeah, thank you for your time today, and yeah, please sign up to our market updates on GoldCore.com, and you can follow us on all the usual channels, particularly on YouTube, on iTunes, on SoundCloud, on Twitter, on Facebook, and indeed on LinkedIn, where we have strong presences. And yeah, thanks again. Take care. Bye-bye.